Hi, Facebook friends. I wanted to um, apologize. I had tested this and I thought it had worked. And so, technical difficulties. I'm sheltering in place, not in my regular office, and some of these details have ellipsed me, and yet I appreciate your patience. So, if any of you are still here, I am happy to talk tonight about building our confidence in these chaotic markets. And so I affirm you for dipping your toe into these waters, these choppy waters. For all intents and purposes, we've often put ourselves kind of in the judgment seat, especially around our money, right? It's a lot of negativity, right? And I really feel that if we can get ourselves out of that and into possibility, that will build our confidence as well as other tools, which we'll share tonight. So, all that, oh, I shoulda, coulda, woulda talk, I want to have us stop. Just stop. Let's get out of our own should pile. I want to talk a little bit about history because history is for learning lessons, right? History is not for berating ourselves. Oh, I did this before and I didn't do it well and I messed up this time. And there's a whole lot of negativity that then begets negativity, right? That kind of thing gets cemented in a way that we don't want that drudge in our psyche. We surely do not want that. So I invite you to do the Ho'oponopono. Forgive yourself. This will build our confidence. I gave a TEDx talk last year on building confidence, particularly for women investors, mature investors whom have not received the socialization, the tools, right? So this berating ourselves, well, we didn't get money right and we're not positioned where we should be from a financial or investment standpoint is maybe a little ill-placed. I mean, we don't have a society or a school system or university system or even a corporate system or public education system that does give us the tools, right? That gives us the planning ideas and the building blocks with which we can work. You see, a lot of people think that because finances are on 24/7 on the television, and of course, always able to be researched on the internet, that they should know this. There's a medical library called in the internet as well. And yet, should you know how to do your open heart surgery? I mean, absolutely not. And yet, we're just fed this information about money with such a steady stream, and often by pundits, television pundits particularly, whose mission it is to gain your eyeballs, right? Not to plan your money. This is nothing to do with your and my financial security, all this financial news, what the Dow closed at today. So I want to build our confidence by getting the emphasis, like a friend of mine said, on the right syllable, right? I think the emphasis has been on the wrong syllable. We've thought we didn't do it right. We may not have done certain things right. And yet, that kind of self judgment has, I think, stepped in our way of feeding the confidence and the times we did get it right. And I'm the first one to help cheerlead that effort. So, let's talk about one good building block that will give us more confidence. And that is, I guarantee you, because you're on tonight, or maybe you're watching the replay, you'll never be this scared, upset, panicked, paralyzed again. Think of it. That's good news. Because right now, you're going to start with formulating a plan or maybe tweaking your plan in a more productive way. The problem, I think, has been there's been an awful lot of commission salespeople out there peddling products, and they aren't paid to formulate a plan for those products to fit into. My partner and I, Asta Sanders, at Empowered Retirement, we start every relationship with a financial plan. It just makes sense. I'm not saying products are bad. Please do not hear me as saying that. Insurance products are very, very valuable. I'm also a certified grief coach. Trust me when I say this. I am not drubbing financial products or the sales therein. I am asking us to take the leadership of and the nonsensical approach, if you will, or the sensible approach, excuse me, of getting a financial plan in place. Often you have to seek out a fee only fiduciary financial planner because we're the class of financial planners that are trained to do that. We dovetail income tax, estate planning, cash flow and budgeting, investments, the group of benefits that you may have if you're employed outside the home, risk management, decumulation risk, all of these things we dovetail together in formulating a plan that help us overcome the risk of longevity, right? Because in this generation and in generations to follow, we're going to need our money to last longer. So that's for a different day. But right now, I want us to be encouraged and build our confidence because we're going to formulate a plan. I'm going to give you some tips at the end and give you some free resources that will be great places to start. So we want to pivot the order. We don't want to have all these financial products as the train cars, if you will, without the train engine. So we'll have the train engine in the plan, and then we'll figure out what of your financial products fit on this train, if you will, that's aimed towards your goals and objectives. And if there are products and train cars that don't belong, we take them off, we put ones that do belong. That should build our confidence that we're going to now gain mastery and control over our finances. And trust me, it's not that complicated, right? So we're going to pivot and we're going to progress on that train track, on that trajectory towards meeting our goals. Now, I get it. It's an emotional time. It's a time of unprecedented health risk. And the markets, of course, are gyrating minute by minute, second by second. You see, these huge jumps are unprecedented. But it's not just the pandemic, right? It's the promulgation of automated and programmed trading. So we're not really going to have a chance as individual investors to push the buy button on our stock buying software. We're not going to compete well with the machines. So I don't suggest you do that. It's a losing game. But those program trading activities do tend to cause the market gyrations and the Dow and the Standard and Poor, which are two widely tracked indexes, to gyrate several hundred points now a day with frequency. Let's not get our focus on the wrong syllable, however, because basically what we're talking about is planning ultimately for the long term while giving ourselves provisions for the short term. So, yes, we want to chunk our lives down, if you will, and I do this in the planning process all day long. What are your goals between 1 and 12 months? What are your goals 1 and 3 years, 3 and 5 years, 5 and 7 years, 7+ years? And then we go about assessing which train cars to put on that track. It may be that you have the right products, but they're not on the right train track. So the long-term train track, and I'll deal with the short term here in a second, but the long-term train track still needs to have a fair amount of stock or equity exposure. There's a whole lot of talk now in the industry and on the news about de-risking our portfolios. Like risk is horrible. Well, I'll grant you, risk is a four-letter word, but risk goes both ways. Like nobody's breaking a worry sweat right when the market goes straight up. But that's risk as well. Now I get it. People feel twice as poorly about an equal dollar loss as they do about an equal dollar gain. That's painful. Losing money is painful. I've lost money. It's still painful. Yet, have we lost money? if we haven't sold into this downdraft at depressed prices, I beg you to remember these numbers and the reduced valuations are on paper. Well, this is what we used to say, paper losses before the age of electronics. Now you pick up your smartphone and you look at your 401k balance or your bank balance or your investment balance. I get it. Until we issue a sell order and lock that lower price in, we have not ultimately lost money. Now, again, as Mark Twain, it'll say, history may not repeat itself, but it'll surely rhyme. Now, I'm forbidden by the FINRA and the SEC, Securities and Exchange Commission, from opining about what the future of the market will be. I have no idea what the future of the market will be, but I have a sense it'll be like history, which is in every other market downturn of 10 to 50%, we've had a complete recovery and then excess upside. So let's keep our focus on the long term, and stocks have traditionally provided the best return for the long haul. Now, in case you think I'm talking market speak, if your realtor came along and knocked on your door and said, your house is worth $342,000, $796 today, you might be kind of stunned, like, why is the realtor at my door? They say, thank you very much, and you shut the door. The next day comes along, your realtor knocks on the door and says, your house is worth $340,963 today. Now, I'm thinking you're not even opening the door the third day when he or she knocks. Why? This is completely useless information. The short-term price variations are absolutely meaningless. If we're in it for the long term, we'll absolutely feel that upside risk, and that will compound and help us reach our financial goals. Now, let's talk about the short term, because here we are, and we're in a whole lot of uncertainty. And some of us have said, I couldn't afford to have an emergency fund. And I'm suspecting that we're rethinking those statements to actually now utter or think or feel, I can't do this again without an emergency fund. It's just too painful. So let's build our confidence and again say, we won't be this flat footed, if you will, again. We'll resist the urge to one click buy on Amazon or whatever our spending habits have been. And trust me, some of this isn't your fault either. I mean, our mothers and grandfathers and ancestors did not have the ability to push a smartphone button and have an item of our delight, mostly probably not need, delight, delivered to a locker 3 miles down the road, if it's that far, in 2 hours. I mean, this is terrific pressure against which we must rail. We must say, no, we have a plan. We want this vacation home. We want these college educations to be at least partially paid for. We want to retire or kick back at some point with a percentage of our current income. We want that income to be ever increasing because inflation is always on the horizon. It may not be evident now because we're in a low interest rate environment, but trust me, take any 10-year swath of history and you'll see. I mean, I paid twice as much for my car at age 24 than my parents paid for their house. I remember nickel ice cream cones. See? So the prices will increase, and we'll want to prepare ourselves and plan for all of those eventualities in the timelines that they occur. So, with a plan, you'll basically parse out what it is that you're aiming for, what are your goals. A good financial planner will throw in some contingency plans for the unexpected, because here we are in an unexpected time. Yes, we knew the market was going to correct. For goodness sake, the last time the market record on a bull market was 7 years. We were like 10 plus 11 years into it. Yes, we knew markets were going to correct and the stock market was going to reprice itself. And yet we also have the confidence that it will come back out. Now, speaking of this, I don't really want, unless you're really cramped from a cash flow standpoint, to stop your 401k contributions, right? Because let's say you were investing into one particular mutual fund, just to keep it easy, and let's say the price is $10 a share, and let's say you're putting in $1,000 a month, okay, or $100. It matters not. If you're putting in $100 a month and you're buying a $10 a share item, you're going to buy 10 shares. Now, if the market has taken that price of that very same asset that you liked before, you probably still like it, down to $7, and you're putting in $100, you're buying more than 10 shares, aren't you? You're buying a lot more shares. And that's in one example with a $10 to $7 price declination. Can you imagine how many more units you're going to amass in this accumulation period if you're still in that before you're cutting back on working full time or even part time? So it's the accumulation of units that we should be focused upon, not the price. We only want to deal with the price when we sell. That's the job of a financial planner, to hold your hand in that decumulation period after you've accumulated basically what you're going to do and you stop earning active income and now you start spending from that nest egg. You're supplementing Social Security, maybe a company pension plan, your 401k, and the like. So I want us to focus on the power that we want. I think we'll surely feel that we're buying more units if we're able to keep contributing to our 401k or our 403b. That's the counterpart to 401k for not for profit, so hospitals, teachers, etc. I always take a teaching approach, so you can count on that from me. Now, what I wanted to do is talk about these times. Let's say you've lost your job, you've been furloughed, you've been laid off. There's an awful lot of jargon and back and forth from CPA firms and so forth talking to small businesses. How should you treat your valued employees? Should you furlough them? Should you lay them off? And so I don't want anybody to take the notion and the first wave, if you will, and now we're probably in the second wave of employment notice, that you're absolutely kicked to the curb forever. It's most likely that you'll be brought back into the employment fold in some capacity. And we'll deal with how the new capacity differs from the old capacity in another session. But I'm not taking away from the angst of that. That is completely harrowing, the thought of it, because it's not something we planned upon. One person to be out of an employment, and let alone, God forbid, a couple, two people having not received a paycheck in the past couple of weeks. Now, before we panic, however, I want us to remember that it's likely that we have assets somewhere from which to draw. I liken it to cargo pants. You might have some money coming to you from the government. That's one pocket. You might, if you have a small business, you might have some payroll help from another plan from the government. You might have a deferral from your bank so that you don't have to pay your mortgage for a full month or perhaps longer. You might want to converse with your banker if you have that kind of a relationship, or even call customer service if you don't have it yet. Your car loan may be able to be deferred from being paid back on a systematic basis. Clearly, student loans have already been furloughed in terms of their payback for 6 months, I believe. So the issue is there are new programs coming out and new opportunities coming out a lot, like not every day, but a lot. And we want to be attuned to that. So call your professional, call your financial advisor, call your accountant. If you don't have one, look into getting one. We'd be happy to give you some tips on how to best do that. So I want us to be buoyed by the fact that we do have resources. Certainly, homeowners may have equity in their home. I get it. The valuations have taken a drubbing, but if you have an available home equity line of credit, you could tap that in the meantime, bridge yourself over this immediate cash flow hurdle, and figure out how to repay that back in time. Um, you can cut your expenses. I'm going to give you 7 tips at the end where you can take each one of those and make significant headway. And I think give yourself a lot more confidence and find money, right? Now we're in a game. We're in a game here. And we want to be in the game. We want to be players. We want to be looking for the cash and looking for how we can cut back the expenses. It's perhaps that basic. If you're in a more luxurious position and you can afford to invest, then there's a whole different world that you can tap and tax advantages that you can also tap, and we'll get into that as well. So there are probably sources. There may be family or friends. I know I sent checks to a few people that I felt might be helped by them. I'm not the richest person in the world. We're paid on the value of our clients' assets. Believe me, I took a terrific hit in my own personal income. But if we're able to give to other people, it buoys us. And I think it buoys our confidence. Forget money for a moment. I'm walking up and down the street or the beach, and we have to stay 6 feet apart, but no one said you can't smile. I wave, I smile. That stuff is contagious. We can do this if we stay together, if we stay the course, if we build up our confidence. Inevitably, there are more ideas that get generated in our brains because we're just that smart and we're just that intuitive and have a lot of ingenuity. Play like you're a coach and you have a bunch of players here at the beginning of the season. You're going to assess all of your players, their strengths, their weaknesses, and then you're going to assess, what do I think I'm going to need to win more games in this season than lose them? And that's what my 7 tips are going to help you sink into and get your focus on the right syllable. Let's marshal all of our energy towards our own empowerment. So turn off that television a lot. Read the news if you need to. Data collect now. What we have now is time. Let's use that time to collect our data. And I dare say it's not going to be as frightening as you fear, because we all know about fear. And I'm going to do another session on how we hold the fear, because that is ultimately really important. So, what we can do is gather our data, formulate a plan, and plan to win this money game. You see, money is a tool. There have been Facebook posts abounding about less pollution, less air pollution, less water pollution, kids actually getting to know their parents and vice versa, partners actually getting to know each other in a different way. There are many, many good byproducts of us spending time and forging relationships and building relationships. And with that, 1 and 1 can make 3. We can translate those victories into financial victories. We're happy to help you do just that. I have almost always found more resources for people than what they were seeing, because, see, the fear got right in front of them, right here. The fear got right there. And I just take the fear down and say, let's deal with that. So the emotions that you're feeling now, I invite you to write them down. Might be scary, might be emotional, probably be both. Once we bring those emotions conscious, we can deal with them. That's what my mantra has always been. Show me the facts. I'll imagine my way to a plan to get us to the other side, to get us to achieving our goals. And there's going to be a whole lot of tweaking, perhaps. But tweaking a plan is just so much better than being without a plan. So let's help ourselves. Let's take the steps to formulate even the most basic of plans, and then get with a financial professional to be your coach, to sound these ideas off of, to see if they have veracity. So what we're going to do is post the link on this Facebook page. But if you go to bit.ly/7, the number, empowerment steps. Our company is Empowered Retirement. Us and I are completely about empowerment. I hope I've given you some confidence builders tonight to help you feel more empowered. So go to bit.ly/the number 7 empowerment steps to get 7 easy to follow steps to get you closer to your financial independence and certainly get you feeling better about yourselves because that will generate the enthusiasm and the confidence and the commitment to forming new habits where new habits may be needed and to complimenting yourself on those victories that sometimes that doesn't get put to the fore because of all of the negativity that we and the media stack on to us. So get out of our should piles. Forgive ourselves for anything that we feel is a misgiving or a mistake. I suspect they're probably not mistakes, and certainly I suspect they're able to be recovered from. So join us on our website, empoweredretirement.com, but grab these 7 steps, empowerment steps, 7 empowerment steps that can get you further along your path and give you the specificity. And then if you wish to talk with us further, schedule an appointment. There's a link there too. Until next time, I'm going to actually do, and I finally have figured this out, and my apologies for the slip up, live at 5, Tuesdays, Wednesdays, and Thursdays for the month of April. And we're going to deal with emotions, money, confidence building, fear busting, how to hold fear, and a host of other topics. If you'd like me to talk on something that's near and dear to your heart, please shoot me an email or a Facebook message, and we'll do just that. Until then, God bless, stay healthy, support the people in your family and around your friends. Let's do this together, and we will handle the money as well. Thank you so much.